And we're live. Hi, everybody. Welcome back to Crypto Talks. My name is Phil. This is Rob. That's Rob. That's Rob. And we're doing TA Monday again. And we're going to be looking at Bitcoin. We're going to be looking at Solana, actually. And we're actually going to zoom in a little bit. We don't usually zoom in that much. But for this one, we are going to because things are either ramping up or falling over. We'll have to kind of decipher that as we go along, I think. And Rob, you wanted to look at, what was it?
Surprise.
Okay, surprise. Rob's got a surprise for us.
It's a nice, boring look. It's something dull as anything. It's stable coins. But
all right, well, hey, important stuff. I see we got Goose in the chat. We got Dave in the chat. We got Badger. Hello, guys. And guys, remember, leave a like right now. I tend to say do that after we're done. Do it now.
Do it now. Do it right now.
The algorithm thing will do algorithmic things, and then we will be happy. More people get to see us. And also, if you guys have any questions as we go along with this, just spam the chat. We will, save some of them and see if we can respond to as many as possible. I'll do it for $5. Okay, Goes. Sure, I'll give you $5.
We'll owe you $5
later.
Yeah.
We'll owe you $5. So it'll be good. All right, I'm just gonna jump right into Bitcoin right away because I think it's a good starting point. So let's have a look. The chart's the same as it's always been. Everyone who's been watching us, they know. You all know. It's the same. It's the same TA. We're still in the same uptrend, still the same channel, but we have been stuck on this trend line now for how long is that?
4 weeks?
Since I think it's since the 9th of November we've been stuck under it, like on it. And I'm actually just gonna zoom straight into this right away because there's nothing else to see there. Oh, that didn't work at all. I just messed that up. Right, there we go. See, it's when I try to change the way I do things by double clicking and just getting it in there, I mess it up because I've been, it's been years of me zooming manually.
Just zoom in, yeah, but your way is fugly.
Yeah, I know. And hi Silvio, by the way.
Hey.
All right, so here's Bitcoin on the 4 hourly, and I tend to just keep the RSI on at all times because for me that is like my main go-to thing. And genuinely, I don't feel like we need to go into more detail than just looking at the RSI and some trend lines at this point. Because basically, as you can see, the only thing that's actually happened in the past couple of weeks is slowly creeping up and to the right, which is, we want that, right?
It's consolidating underneath the upper trend line. That's it. It's not dumping. It's. I actually do have that trend line drawn slightly slower. Use it where you had that peak, whether you had that pierce through the bottom. I've just lined it up with a touch. It does meet that quite nicely.
Yeah. No, I put it on the candle closes here and the wicks here, and then I just ignore this because I feel like that's kind of a reversed God candle that just happened to close under it. And
yeah, well,
right back up. So.
This is the importance of the confirmation candle. It's not just enough to say, oh, we've closed below the candle, therefore we closed below a trend line, therefore everything's going to zero. Yeah. No, not necessarily. Wait, see some confirmation, look for support, look for resistance. That's the thing, is you want to see that trend line be tested as resistance.
Precisely.
And if it then loses further lows, i.e., if you look, that was still a higher low relative to the wick that touched the trend line that you have there. And so even though it briefly deviated and dropped down, uptrend was intact. It held the range and proceeded to then make a new high. Yeah.
And we've been talking about our fib levels, and for those of you who remember them, we have those fib levels drawn for I don't even know how long, and they've been drawn since the all-time high, actually, and they played against that for the entire time, the entire uptrend now, and the half of the bear market. But this red line right here, that's one of the fib levels, and you can see even at this zoomed-in range, you still have kind of support on it. It's not really exactly there. It's not that precise, but it's
exactly there.
When I say exact, I mean pin needle doesn't go through.
Yeah,
right?
you know, 35,500 has been a key level multiple times. We saw
Yeah.
that, and
Yep,
yeah, it
precisely.
remains so.
Well, so the only thing that's actually really happened, except for just this trend staying intact, is not much volatility, and then more volatility, and it's slowing down in terms of the pumps and the dumps here, mainly because we're trending up towards a trend line that is it's not sloping that hard. So we're getting it's getting tighter and tighter. And the question that I'm asking myself here is this going to go up or down? Because if it breaks above this is a very long-term trend line. We will get, moves up towards at least 40K. We've been talking about 48 because there's an old top there. That could possibly happen. I mean, if you just looking at the 4-hourly, the RSI topped out right here, and it's been working itself down. It's kind of going up and down, but it's staying kind of bearish, and now we're bottoming out again. Does that mean that we're going to pump? No, it doesn't mean that. It could, but it could also turn back down and come down and give us that big red RSI that we kind of look for, and that means getting through this trend line. And it's the same story the other way around. Like if we crack this, then we have all this room to pull back up again on the 4-hourly. And so I'm not sure how to decipher this, to be honest with you. And
I mean,
we have to wait and see, is what I'm trying to say.
Yeah, at its simplest level, it's an ascending triangle. Ascending triangles typically, people say typically, but more often break bearish. And then because of that, people see it and they go, oh, it's a bearish pattern, it's going to break down. No, sometimes it does break upwards. It just usually breaks down.
Yeah,
however,
I think it's a 70-30%.
Yeah, roughly. But you have to look at it within the context of the broader analysis, which is that the reason why it tends to break down is simply because the bottom, the support level, is a steeper uptrend, and so it has to continually find new buyers at higher and higher levels. Meanwhile, as you can see, the sellers have come in higher but at consistent levels. So as it stands, the fact that it's holding such a steep uptrend and continuing to make increasing higher highs and higher lows is a sign of strength, and it should only be taken as a sign of weakness when it confirms a downward break. And even then you have to it takes a while. This is that thing, it takes a while to reverse a trend. Trends don't just snap into reversal. You have to form a proper reversal is a higher low followed by a lower high, a lower low followed by a lower high followed by another lower low. It's that break of the low that sets the downtrend. Right now, we're still in a confirmed uptrend, and so don't panic and accept. If you were looking to sell a reversal, realistically, right now the reversal comes at 35K.
Yeah,
this is the problem with trading crypto, is that people are not willing to lose, or they're scared about losing 10 to 15% before they've even confirmed a downtrend. So because of that, they always try and chase tops, or they always try and stop themselves out 5% on a 5% dip, only for the trend to just continue higher. You have to look at where the actual charts are, and sometimes, those reversal levels, they're a lot more drawdown than you really want.
Yeah. Well, I mean, there's a few trades you can do here. I'm not gonna tell you to do them, but it's like you have a couple of choices here, and it's either you could decide to sell this or short this, the break or the confirmation of this trend line, to wait for it to go further down. You can do that. You can also do the same in the other direction. You could wait for this to break and then get in and ride the uptrend, or you can just buy here and hope that it breaks through, or just make a short trade where you stop it out like right here.
And that, if you think that's exactly what the market is doing. There are people who are already long from lower down. They're looking at this and they're going, okay, this is a bearish pattern. I've ridden this an awful long way. I'm gonna sell every time it gets to the top of this trend line. And then you've got other people who are currently not in the market going, oh shit, I really need to buy. Where do I buy? Okay, I buy the bottom of the uptrend. And so that's why you get these patterns, because there's no liquidity in between these two values. Nobody is selling below the upper resistance level, and no one is buying up until we get to the support. So yeah, we just bounce between the two until we get a convincing break. And at that point, with that confirmation of volume, of the idea that okay, the market has decided there are more sellers than buyers, or there are more buyers than sellers, and the market can pick a direction. At that point, that's one of those times to ride the trend, because you expect it to go higher. If you are currently in a position and you don't want to sell out, we've got an uptrend. You've got continuously higher lows. You've got positions to set a stop loss, or even to just watch, that will confirm a reversal. Because even on following a reversal, look how often here where the market has given you opportunities to buy, when for every person selling those tops at 37, 38k, there's somebody that bought them. So there's somebody buying those false breakouts, and that's not the way to, it will work if they've got the balls to hold on and not let themselves get stopped out. But
let's be honest, that's the way the market works.
That's how the market is designed. Yeah, the market is designed around that, and it's not. It isn't complex to look at, I say, a pattern such as this and just wait for it to touch the bottom of the trend whenever that is, and that's your buy level.
And this is TA Monday, right? But you got to keep in mind, when you do TA, you have to think about the psychological side of all these things, because TA is built on psychology, really. Because the reason to why the trend lines are where they are is because everyone else is doing the same trend lines, because they see the same patterns, and then they have the same psychology behind it, thinking, yeah, it might bounce here, so I'm going to get a limit order here, and then it works. And that's how it works. So doing TA and not, just looking at technical stuff without thinking about the psychological impact of all the other people who are in this market is not a good idea. Like, you keep your head in the psychological state where you can understand how other people think. And there's a bunch of books about that. I can share that in the Discord later on for books about that. But don't just do TA. Is what I'm trying to say. But TA is good because it works.
Well,
right.
But also what you can do, and what you can learn to spot over time, is that actually the psychology is actually right in front of you on the chart, and it is in a way. Okay, it's like reading tea leaves, but it's still you see. We look at this. You mentioned it earlier that the past couple of weeks has been a much more volatile period than the couple of weeks preceding it. Bitcoin's always volatile. It always is. But look, you see the way that for the end of October into November, it was a very narrow band of just continually increasing prices. And that is that is psychologically there, saying there isn't a whole lot of selling. There's not, people you're quite uncertain, and they're just sort of, people are consistently buying because it's broken out, and they've now gone, oh, I've missed the bottom. So you've got this continuous trend of buying. The majority of that is likely done. You then pump away from it, and then you're left with panic buyers. You're left with people going, oh no, it's a change in emotion. So you start to see these rapid moves up. That's emotion. That's people trying to be positioned how they want to be, and often letting the market dictate what their emotional state and what their trading behavior is going to be. And of course, the idea is to be as emotionless as you can. He wants to say hello.
Yeah, all you can do is really hug a cat and you'll calm down. Anyway,
hug a cat and you'll calm down.
So we have kind of a bearish and a bullish kind of outlook at the same time. Currently, it's this 4-hourly candle is currently giving us a pretty decent wick at the top here, which is currently kind of a bearish indication, but it's just a candle, so it's like whatever. What I want to do, though,
engulfing candle at the start of the stream, so it has dropped in a little bit.
So what I want to do is I want to go out to the daily actually, and just give you more of a. This is why we say zoom out, because we have this massive trend line right here, and even this one is the where the bottomed out. It's from the bear market, previous bear market to this bear market, and then it just continues on. But this is the trend line we have right now, and we're sliding across this with a very short-term trend line. It's not a very long-term trend line, and the surprising thing to me is that a trend line that is this short is fighting a massive resistance, right? And it's still holding on. And for me, it's like, okay, eventually it's going to crack one way or the other, obviously.
Yeah, pretty soon.
And very soon, because it's getting very tight, as you can see here. So, I'm thinking there are probably a lot more people that bought in here and maybe here, or all the way down, that are sitting here watching this, seeing this happen before and then seeing this happening right now, and thinking I should probably take some profits here, which is why you're getting all that sell pressure. But then you have people that are very bullish on the ETF coming out and all that stuff, which is now delayed until January, by the way, if I remember correctly.
Like, did you notice how there was nowhere near as much noise about the delay as there was the announcement?
The announcement, but it's the same thing always.
This is the thing with psychology is the news. The news is a money killer. Do not listen to the news offhand. Obviously, important developments are important, but don't think that is the reason you have to buy today. That's not how the market works.
I would argue as well, like, good news is important, but bad news is even more important. Like, genuinely, because if you don't keep track of that, what are you doing? Right? So what I'm trying to say here is that I feel, this is my opinion, that we have a bigger chance of coming down to at least this green level, this 32 here, than we have of cracking through. Mainly because of the length of this trend line and how far we've gone holding this up. And it's, I could be super wrong, because what I wanted to say too is we're basically in the middle of the RSI band right here. And could it bounce and just continue the uptrend and get us back in here to put us at 48? Yes, of course. I mean, definitely. But generally speaking, when you start, a downtrend from a daily RSI, it usually goes to the bottom eventually, right? Almost every time, essentially. Now we're doing that. Is the likelihood of it bouncing here and moving us up is fairly low in comparison. It doesn't mean that it can't happen, but I think allowing the RSI and all the other indicators, to reset, come back to where it's oversold, or at least further down the line. We could do this super slowly, like this. We could even do it sideways like that and then go.
Or we could do it in a day.
Or we could do it in a day and just say,
it's.
I mean, you shouldn't be here.
Yeah, that literally here. That is not.
It's like, I mean, it's right there on the screen for everyone to see, right? So
I don't expect the two left ones to
maybe not
the collapse of thing. But it depends if we see something collapse. The U.S. banking sector, the Chinese banking sector.
Oh wait, the U.S. banking sector is going to crash again? Sorry, just it's that one. I remember it so well. Either way, so that's what I have for you on Bitcoin right now. I am hoping personally for a downtrend because I need an in on Solana again, which is what we're going to talk about now. Unless, Rob, you have something super interesting. All right. So, oh gosh, I forgot to do. Forgot to double click. There we go. You see, this is why I shouldn't be messing around and trying to change how I do things, Rob, because it just gets weird.
Just keep it always on auto. It's because you keep clicking off it.
It's annoying. I don't like the way this looks. That's my problem. Because I want to see it like this.
We're going to continue to fight about this.
Yeah. We'll drop some merch later. We'll double click. But yes, so here we go. Solana on the 4 hourly. I did say last week that I got out of my Solana position right around here at 56 or something. Because honestly, I kind of felt like, oh, it's gonna carry on down from, all the way down to where my targets are, which was 48, 45, and 40 or 39.
0.
Yeah, not 0, but
Wow.
a hefty downtrend. And I got out a bit too early because I sold it right here, I think, and I woke up the next day when it was here. So that was kind of like a oof. And it is what it is, but it's fine.
It says, however, next question: where did you buy it?
Well, I bought it all over the place. Well, I bought it at, I think my cost basis was 22, so I took some very good, nice profits.
So objectively,
it's 170% trade, 150% trade. Yeah.
Congratulations, you won. So
yes,
the thing is, don't obsess about it.
No, I'm not. Yeah. So what we're going to do now, though, is we're going to look at where Solana is going, because Solana, compared to Bitcoin, obviously you can see is going basically sideways with very high volatility. We've seen a huge, just this pump or this correction from the first was 20%. And then from this to this top is a 33% pump. And it goes on like that, 20% pump, 20% drop, 20% pump, 20% drop. It's been extremely volatile, and I've had so many lines on this that I don't even know how many. Probably like 40, which is awkward because
too many. Because all you needed were these ones.
All I needed was, well, obviously they played out through the course of, the price action, but yes. So here's where we are right now, and just to preface, we've been stuck in kind of this range for the last couple of days, which is a short range between 56 and 60, let's say 60. It's been stuck there. It's finally cracked through that. I think it bounced 3 times. It's bounced on it, and then the 4th time now it failed that. And now we're down at the longer term trend lines that I've been looking at here on Solana. And this one, by the way, is very long. It's all the way from 2nd of October, and it goes through here, but it's got support everywhere, so it's a viable one. And right now Solana is fighting it, and like we said on Bitcoin, we had a 4-hour. I don't know if you can see this though. Also,
it looks very similar, doesn't it?
Yeah, it was engulfing when it opened, or when we started streaming, and now it's kind of cracking through. So for me, who's looking for an in, I'm hoping for this to just crack. And I think if these two trend lines crack, I don't really see Solana holding up a 3rd time like it did here at 51.
Well, that's it. My argument would be simply it depends on Bitcoin. If Bitcoin holds this level, Solana will likely hold this level, and this is
exactly what I was going to say.
Yeah, you can make this. You can make a very, very justifiable decision on. Oh, yeah, I'm going to sell Solana here because this looks like it's cracking through a support line. But then, if Bitcoin decides, you know what, I fancy holding that support line, and it just pumps up 10%, and then what do you think Solana's doing? Solana's just going to crack, and it's probably going to crack that downtrend and carry on. You can't look at altcoins in isolation. They will just do what they want to sometimes, but you have to consider the bias from Bitcoin when you think about it.
Oh yeah, for sure. And
again, this is starting a downtrend, but it hasn't broken and made a considerable lower low. It's not late. It hasn't made an actual lower low. Yeah.
Well,
it breaks that double at bottom.
It's a different pattern from Bitcoin, but it's the same outcome. It's like we are very close to breaking down. Same with Bitcoin. We're just a bounce of these both Bitcoin's trend line and these Solana trend lines from going through the upper trend line and carrying on up, right? I think we said Bitcoin's first target was 40 and then 48 potentially, if things really start moving. And for Solana, I think the first and almost only target that I've even looked at, because I haven't. Actually, there's 2. There's one for 78 here, and then one for 138 that I've put out here. But I don't know. It's hard to say. I think it's going to 138. It just sounds ridiculous. But before this previous pump that we had, that sounded ridiculous as well.
Yeah.
So we don't know. I'm not saying Solana is going to 138. My first target is 78 if it does crack this. However, on the downside, if we do crack downwards, obviously 51 is the support level. If it cracks these trend lines and that, I don't really see any support until I'm going to show you where it's anchored as well at 48. Yes, 48, which is right here. That's a weekly close. That's why it looks kind of weird. And then no, sorry, that's where it is. And then it's 45 is the weekly close up here. And then we obviously have these two tops right here, which correlates to kind of a
yeah. That was
a dip thing there. It's not that massive, but
see, that's an example where of what we're saying there is that was an example of a support level breaking and then holding and retesting and confirming and going, yep, you know what, we're ready to move higher.
correct.
And it showed strength when it came and tested that support line. You may see it again here with Solana. It might show strength at 51 and go, no, you know what, we're not done yet. And that's perfectly likely. It's less likely than what is starting to look like a downtrend, what looked like a head and shoulders pattern, which then didn't play out. You know, we'd expected a drop the last time it hit 51 to complete that head and shoulders. And normally when they fail, they tend to shoot off the other way. But no, it's now putting another, basically a smaller shoulder, and it's testing it again. That, you know, this is a clear sign of weakness in something which has had a hell of a run. So it's normal that it will have a cooling off period. It's not a sign of fundamental weakness or long-term weakness. It's not anything bad about it. It's not a criticism. It's just the chart. There's no criticism or knocking or bashing it because you like Solana or you don't like Solana. The chart is not discriminate about that.
Yeah, the chart doesn't care about your feelings.
Yes.
So for the, let's say, a bullish sentiment here, just quickly. Look, we are bouncing kind of here. We're not cracked. We haven't confirmed that this trend line is cracked. The 4-hourly RSI is basically oversold. It's got a little bit more to go if it needs to, but it can still bounce here like it did over here. So that's one plus, I guess, that speaks for some strength. But, you know, as soon as we go to the daily, we got the same story like with Bitcoin. I'm going to hide the drawings here because I just can't look at that. With the RSI here, you know, same story with Bitcoin. We're close to 50. It can bounce on the 50 line and go up. It doesn't normally do that, like we just discussed earlier. It kind of wants to creep down to an oversold territory, which is down here.
I will say, you say it doesn't necessarily do that. It did do it this time. What roughly?
Well, it did here.
What we're talking about here, yeah. So, like, you see, it we're talking about likelihood.
That is from a very small overbought territory.
True.
This is a massive overbought. So,
but it's still the same strength. But it's still the same RSI level.
Yep.
And
it is.
So, you know, we have to consider that if this is going to be a longer term trend, then this is the place for the RSI to bounce at this 50 level. Yeah. And then that, you know, this is then another sign, which would be, okay, if there's a technical break of $51 and there's a technical break of the RSI uptrend, well, there's additional, you know, it's more downtrend. It's more than just going, oh, it's broken a level. It's a sign that, yes, that the overall trend may be shifting that's, you know, being a multi-month trend.
Yeah. But so I'll do this then, just to put some lines on there. Like, that's kind of where the trend is broken, right? It's even come up to retest it. I just noticed that. I haven't looked at this. Honestly, I haven't done these lines yet. But for me, this looks kind of bearish. But you could say the same thing when it cracked this, right? It cracked down and came back up again. But again, I think when you're looking at this much of movement in the top range of the RSI, I personally have a hard time seeing this.
At the same time, the simple fact of the RSI is it's a 14-day indicator or a 14 candle indicator. So if we have been trading sideways for 14 days, the RSI is going to be roughly 50. no matter
Yeah.
what. So the reason why it looks particularly bearish is because it's come from a high point.
Mm-hmm.
Yes, it could move into a longer term downtrend, start putting in higher, lower lows and lower highs. But as it stands, it hasn't actually dropped below. So the uptrend and everything is intact. And so it's just there's warning signs in both directions, and fear and greed work in both directions, where you can be fearful that the coin is going to drop lower, or you can be fearful that your coin is going to go to the moon and you've not got your bag. They're both fear. They're both a form of fear. They're both a form of greed. Fear and greed are the same thing. Fear of loss, fear of missing out on gains. They're both the same. And the market gives you lots and lots of bites of the apple. And if you miss one thing, I mean, okay, if something does a 500,000% rally, well then you have to think, is it going to do another 1,000% rally, or is there something else which offers me that same 1,000% rally that's actually sitting nice and dormant and hasn't made anywhere near of a move yet? And so don't panic. There was, I was going to say there were thousands of these cryptocurrencies. I wouldn't recommend touching most of them, but there's always another trade, and it's much better to not win than it is to lose. There's nothing worse than just making continuously losing trades because you're not buying for the right reason.
Yep. Been there, done that. I think everyone has. Yeah.
Everyone,
you need to go through that though.
You have. That's why I've always said to people, like, when they talk, oh yeah, I'm gonna paper trade for a bit, and I went, no, don't paper trade. Give yourself
put $100 in, go.
Yeah, put $100 in. Expect to lose it. Treat it as the same way that you would go into the casino, and it's a rite of passage. It's something that'll make you, because you will care a hell of a lot more about money that you're actually putting in than you will about paper trades. Everyone's a genius paper trading because there's no emotion in it. Yeah, spend some money, lose it, learn from it. That's the important thing, is to learn from the losses.
Oh yeah, for sure. I do want to touch on something before we round off, which is, you just talked about the fear and greed just briefly. TA is good, but there are other things that you can help, that are good tools that can help you in your TA as well. So looking at just the fear and greed index, we're not that far up on, we're at greed. We're not at like extreme greed or anything, because usually when you're at extreme greed, that's when a lot of FOMO happens, and that's when usually say when it's at extreme greed, that's when you start selling, not buying.
Can we see the full chart? Can we get the full history?
Yeah. There we go.
Go to max.
Max. There we go.
So at the same time, you can do TA on this as well. You can
just do 1 year instead, because that.
Well, no. Do go to max. It's far more viewable on the max. Yeah.
All right. Fair enough. Just
say, look at the periods where you're making lower highs and lower lows versus higher highs and higher lows. Right now, since last July, the peak in bearish sentiment was a year ago, last July, and since then, the fear and greed has been making higher highs and higher lows. It is an uptrend. This is just a collection of data. Okay, so not all of it is numbers on a screen, but roughly this is a collection of data that judges how bullish and bearish the market is. It will follow rough technicals. It will follow trends of the fear being less fearful and the greed being more greedy. And this trend has got a way to go yet. We've seen it in the past. We've seen how this metric has also sort of changed significantly in the recent years. From the start back in 2018-19, it's a lot more jaggedy and less and more unstable. Nowadays it tends to hang around in these clusters a lot more closely. So yes, we're in a period of relative greed right now. We're clustered around. We've been here for a few weeks. Is there room to go up higher in the fearing in terms of greed? Yes, there is. We can get more greedy in terms of a metric here. We're only at 66. However, are we ready for full-blown greed? That's something else to consider, is that the market is not necessarily in a position where it can go, yes, full-blown bull market, buy everything to the moon, we're going to 10x our portfolios. Not necessarily. So it wouldn't surprise me to see a drop back down into the 40s on this fear and greed index, putting in another higher low, putting in a signal that, yeah, okay, we are more greedy, we're more ready to buy the dip, we're more excited to buy. But yeah, it's not something to pin your hat on and go, oh, we've got room to move up on the fear and greed index and we're in an uptrend. It's a long-term psychological play, and the phrase "be fearful when others are greedy, be greedy when others are fearful." Right now, do you see more greed or do you see more fear?
Yeah.
And when people start talking about full-blown bull markets, we'll touch on it quickly if you just want to put onto my chart.
I can't because you haven't shared it yet.
I haven't shared it. I shared it before.
I asked you to do it, but you didn't. I was gonna pull up one of the tools that you wrote for us, the bullishness index, and kind of see how that plays here. We can do that after, or if you can pull that up too if you want.
Maybe.
There we go. There's yours.
So okay, here be the total market cap in orange and white. So this is the combined market cap of USDT and USDC. So the combined stablecoin size in the market, and you can see that there's a fair amount of disconnect in the sense that there's a reasonable amount of sort of correlation between these two numbers. But whereas in previous times, in 2019, you saw this peak get a long way above. In fact, can I put these on the same scale? Scales into one. Yes, I can. It's gonna
look weird. I think it was better before.
It won't do if I go logarithmic though. Yeah, there we go. There you go. That's fine. So you can see quite clearly. Those are the same chart. Those are the same trend, right? Yeah. There's no difference in that trend. And actually, I do think it was better before.
Yeah.
There
we go.
So there we go. But whereas, we've got this sort of deviation of the crypto market cap back here was 300 billion, and there were 13 billions worth of stable coins. So there was only, there was about, what we're talking there, 11 billion. Yeah, 10 for every $1 billion worth of stable coins, there was about 30 billions worth of market cap.
Yeah.
And nowadays, you look at it, and you've got $60 billion worth of stable coins, and it's $1.4 trillion of market cap. So it's about 5% or so now, 1 to 20. And here it was 1 to 30. So you've got to kind of consider this, is there enough stable coin in the market to support continued pumps? And the amount of stablecoin liquidity dropped a long way. It dropped from
a bunch.
What's that? The amount of stablecoins in the market's dropped only about 20%. So that's the thing, is they drop significantly, but you kind of have to think, what are these stable coins ready to do? They still exist, and the liquidity is rising. So this is something that we can clearly see. This trend is it's not a secret. We had a rise here in liquidity, we had a drop in liquidity, and these corresponded to moves. We now had a rise in liquidity again. So a lot of stable coins in the market seemingly don't do a lot. They're not contributing to the market, but a few billion gets minted, and suddenly market cap starts. This. If we agree that there's a correlation here, then there's been a 4% increase in the stablecoin market cap, and yet the overall the total market cap has gone from 110 to 1.1 trillion to 1.36 trillion.
Yep.
So
That's a hefty chunk.
A 4% increase in stable coins has helped drive a 30% pump in the market.
Yep.
It doesn't take a lot of money to move these markets. And so if we see this trend continue and we see that, yep, the world wants stable coins for whatever reason, then we can expect to see this trend continue regardless of what the technicals say. This is that thing where you can look at it and go, oh yeah, this pattern is a bearish pattern. Things are overbought. There's a whole lot of overbought technicals that are resetting. The RSI is in a downtrend. But if the stable coins keep going up, it's going to break bullish.
Oh, yeah.
And so this is just the cautionary tale is, as much as the technicals matter, and yeah, these can follow, and you can put a very solid trade in, and even if the trade goes against you, the fundamentals and principles behind that trade are solid, and if you apply those principles every time, you will win more than you lose. But don't be surprised if the market screws you sometimes, and the thing that was a perfectly laid out trade decides that nope, it's going to go against you because the market forces will it. And
yep.
Stablecoin liquidity is one of those things that drives markets, and right now it is pointing upwards. And if that trend continues, why would the crypto market do anything other than pump?
Yep. No, you're right. I was gonna say, do you want to show the bullishness index that you wrote for us that we're gonna put in our Patreon later? I have it already on my screen if you want me to pull it up.
Yeah, put yours up.
Yeah, all right. Let's see. Okay, so Rob, would you like to explain to the good people that are watching us what the bullishness index does?
It is
in your words, because you wrote it.
It is an index of bullishness.
Yes. I hate when you can explain things so simply that I don't have.
Did you want more? Okay,
well,
so it is an aggregate of a lot of technical indicators, just standard technical indicators that you use, but cleverly put in a way using our sublime genius to basically give you an index of the overall. It's essentially an aggregate of how the technicals look for a particular market. Yeah. And it's still, we're kind of still sort of working out how to use it in a way, because it's not always it doesn't exactly give you, it's not like a stochastic where it just points to 100 and goes, here you go, everything's oversold. It's a lot more nuanced and complicated than that, but it does sort of show some very good patterns on it. Okay,
yes, I was just gonna there's some stuff.
What I was gonna do was
I was trying to mark the peaks here.
Yeah.
On these to show kind of what the thought is behind this.
Mm-hmm. I'll just show that. I'll just zoom back a bit. Go to the earlier thing. Go earlier. I would say what the easiest thing that you can see is through 2021, which is, if you look at where that peaked, it peaked only halfway up through the bull run. And this is so that is a point essentially saying that every single technical indicator that you can, or pretty much every technical indicator that you would think to name and look and use, it was pointing sky high. It was pointing extreme overbought on basically every indicator. Does that mean that you sell that indicator? Well, it would have been a mistake if you did, because the market decided it was just going to go and keep on blasting its way upwards. So even when every single indicator screamed, sell, you should sell this, the market went, nope, carry on. And what I found very interesting when I looked at this is, if you notice, we continue to make a year's worth of higher highs, higher lows overall. Obviously the China mining ban in the middle had a bit of a say in things. But if you look at the overall indicators, this bullishness indicator, it moved to neutral, and it stayed relatively neutral when we made a new all-time high. And what that is screaming is essentially, if you look at all of the technical indicators, they were all more bearish at $69,000 Bitcoin than they were in November at a $16,000 Bitcoin. Yeah, they were the market had spent all year cooling off, making lower highs and lower lows, essentially years worth of bearish divergence on the indicators overall, saying this extreme trend, the momentum on it is died. It only went to neutral, don't get me wrong, it didn't go to zero. The momentum wasn't negative, but it quite clearly was neutral for a long time. And as things started to move down, it did start to break down into sort of low territories. Nice, and that was a trend shift. This is a collective shift of the indicators into a bearish move.
Yeah,
and so it was quite obviously, looking at it, if you look at the November 2020 to what May 2022, that is a period of the indicators all saying, guys, this is silly, this is really stupid, just take some goddamn time to think about what you're doing and take some profit off the table, please. Like this, indicators aren't going to mark the bottom and the top.
No,
but they can certainly give you information about what's going on.
Yes, I can tell you how I look at this. When I look at this, because everyone is not going to read indicators the same way, but indicators are built to be read in a certain way, like generally speaking, right? So when I look at this and I see, we have a green line here, we have a red line down here. The closer you are to the red line, the safer it is to get in, sort of, right?
Yeah.
The closer to the green line you are, or if you're even above it, the more dangerous it is to get in. It's that's how I kind of look at this. Because if you look at this, okay, we peaked far outside. Okay, you don't want to, maybe don't want to buy here. But then when it cracks through back down from this, we have basically a perfect top. Almost.
See,
so that's the way I look at it. And just looking at peaks, just looking at just the peaks overall this year here. I mean, here's a peak that's very close to, it's saving you from that. We have this peak here, it's saving you from that. This peak here, right there, saving you from that. It's finding that, and
notice
that's
how
not the way you should read it, but it's just the way I like it.
I'm looking at it. If you what is interesting to note is that the February peak and the current where we are at have both peaked much higher than the other peaks, and the downtrends that preceded them were much softer and shallower. So potentially, this is ways to read it, is that they kind of, the spikes upwards can be more indicative of volatile big moves downwards. And objectively, buying at 16,000 in hindsight, even though everything was overbought, it was a good idea, because you had an opportunity to sell at 65,000 if you could nail the absolute top. So okay, great. That was great. Quadruple your money, perhaps, if you were a good trader. A lot of altcoins did like 50x in that same time. And even though yes, you'd have made money by buying in at that absolute worst time on that indicator, if we just go back to 2020 and look at that indicator, it told you some much better times to buy.
Over here. I mean, here. That's objectively a good place to buy. Objectively.
Yes,
it went lower, but this is not a bad place to buy.
We didn't know the world was going to break in a month, so
no, exactly. And the same thing goes here. Yes, this is. Let's see. That's a valley right there. One right here. One right here. It's all the divs are just there, right? It works. It seems to be working. Good job, Rob.
Well,
you did a thing.
See, this is that's it's the interesting things of looking at the idea of the price the price is hitting equal lows on the indicator. So it only went down as far at the bottom at 3,000 on the indicator as it did at 6,000. So the conditions weren't necessarily in 2018. Sorry, I'm looking at here. So the conditions weren't necessarily more bearish in 2018 at the end of it when it fell off that cliff, because they kind of weren't. What did happen was the stock market fell off a cliff and Bitcoin traded sideways and ignored all of this noise for several weeks, and everyone thought, oh, Bitcoin's really strong, Bitcoin's doing great. And then it just fell off an absolute cliff. And this is sort of that thing of back in the day, that's back when you could control Bitcoin with not a lot of money, and it was quite clear they were propping it up while they distributed, knowing that it was going to drop. And then as soon as they just pulled that support, market just collapsed. But all the indicators were already pointing down. You can't fundamentally get around a situation where the market decides to sell off 50% because of fundamental events. Yep. And you have to just ride that out. And if you're using an indicator that will buy and DCA you in with an idea of a long-term view, then don't worry about it, because the next dip is just another opportunity to buy. It's not an opportunity to panic sell.
Yep. Cool. So that's that indicator, which will be available to you hopefully soon. We're still working on things. We keep saying it. Sorry. It's just, it turns out it's much more work to make it the way we really want it to. We want to make sure that it's perfect before we.
There's one thing. The one thing being 95% done, but it turns out that last 5% is most of the work, it seems. So
getting 80% done is like, you get an idea, you figure out how to do it, you do it, and then you need to fine tune, and that's luckily I don't do the coding, so
we keep having ideas and then making it worse and then having to undo it, and then
but we're very close to being done.
What I keep forgetting about my strategy is I've spent hundreds of hours developing mine. That I said it going for years, like my one that I made first, and have just nurtured and grown over the years. And so I keep having to remind myself that every time I make a change, I've already been through the pain and agony of making that change like 3 years ago, and it didn't work. So it's just a bit of a tiring escapade, but we're getting there.
I'll do one quick thing before we have to round this off. I saw Cody just said 40K, not financial advice, and 40K is there.
Either give financial advice or just stay quiet with predictions.
Get out. No. Seriously though. And I think Bitcoin. No, actually, never mind. Ignore me. But 40K is a level that I don't really see as being a very important level, other than being a psychological number. The real resistance after this trend line that I can see that has some significance. Yes, 40K is somewhat important, but we have this, bear market pump top, which is 48, and I would argue that is a much stronger resistance than 40K. 40K, can happen for sure. I mean, if 48 happens, 40K has already happened, obviously.
Great maths. Well done.
unless it skips it. No, but so I just wanted to respond to that. And Cyrus said, let's see, we'll do some questions quick here before we go. The last 20% takes just as long as the first 80. Yeah. Like Tesla battery charging. I don't have a Tesla yet, but I'm sure that's right. And Cody, thank you for watching this back. That warms my heart. But we're gonna have to round this off here because we started a bit late compared to normally. But you guys remember, leave likes and subscribe and do all those things that you do. Work your magic for the algorithm for us. And make sure you join the Discord. We're going to jump from here into the Discord and hang out for a while. So please join us. Let's talk about some stuff. We can continue this conversation there. And if you're new to crypto and everything, perfect place to be. Join the Discord. We'll help you with getting set up with wallets and everything. That's what we do. We want to help you for free. Yay. So that's all good and dandy. So we're gonna round this off here, guys. We'll see you tomorrow because we're doing Macro Tuesday. I'm not sure exactly what we're gonna do that on. More, always got some macro
topics.
So, but Rob's gonna have to lead that one a little bit. All right, cool. Thanks, guys. See you next time. Cheers.
Bye.